How are we doing? Great, here we are. Hey, everybody. Welcome to the Everything Money live stream, baby. I'm here with your Uncle Paul. We are here every Tuesday and Thursday. We're so happy you joined us. We're here every Tuesday and Thursday at 1 o'clock Eastern to go over all the amazing stocks. We are here to listen to you right off the bat. Jump on the comments. Let us know where you're from, what you're up to, what you're doing, and how you came across us. As always, Paul's going to ask, Paul, how are you? I love you.
I'm wonderful. Are we going to talk about politics today, Seth?
We always ask, make sure you smash that like button, that thumbs up button there in the corner, and we're going to get it going. Benjamin is here. David S. Pumpkins is here. David Spicer, who won our $100 giveaway 2 weeks ago. David S. Pumpkins is here. Louise is already asking about some stock tickers we should look at. Today, we're going over luxury cars, and we do want to look at Square. And Matt Jensen says, let's look at Square. But in the meanwhile, if it's the first time you've ever been here, welcome. If you're watching this on the replay, welcome. Our channel is dedicated to stock analysis, market watches, investing, building long-term growth.
Are we can get to this, or are we
real
just
estate?
Sit here and...
Well, yes. And then, as always, my impatient, my impatient partner here, Paul, is ready and rearing to go. Paul, let's take a look at our first company today, which is what? BMW.
Well, everybody, please hit the like button. Of course, it helps us out a lot. So we're looking at luxury cars today. We decided to look at BMW, Mercedes, and Ferrari.
And we can certainly get to some of the more. We can get to Maybach. We can get to some of those other if
they exist.
If they exist,
we have to look for what companies are out there. What's available for looking at. So BMW, it's traded in the foreign markets. It's not traded here in the U.S. under a ticker. So first off,
you're a French tickler. I know.
I am a French tickler.
What's the market cap
from Cranston? If anybody now, because everyone's gonna Google it. All right, market cap $48 billion. This is how much you're going to pay for the company to buy all the shares. We don't care about the stock price. We care about the market cap. So here we are at 48 billion. PE ratio 13.39. So we already have our first check mark.
This is pillar number 1, right?
Pillar number 1, 13.39. Profit margin. Okay, guys.
Pillar number 2, profit margin.
The last quarter was negative. That's an X. It's still an X. The previous 12 months, about 3% profit margin. Guys, the car business has probably been hurt a little bit in the 2 months. So we have a check mark to start and an X to start. So that's where we are right now.
How about revenue growth? Pillar number 3 is revenue growth.
What do you think it's going to be, Seth?
Revenue for BMW down.
No, like growth or no growth?
I don't know with this company.
Okay.
Marcos, we see you. Ahat, we see you.
99,
Nicholas, I see you there.
107, 111, 114. Check mark. So it has slow, consistent growth, which is expected for such a big company. They're a luxury big company, so it's hard to grow that consistently and fast.
How about profit growth? Pillar number 4 is profit growth.
Profit 776978255x. So they have a decrease in profit. In fact, this is the second lowest profit they've had in the last 10 years.
Paul, on a scale from Leonidas to Xerxes, how Persian is a white Range Rover, which is what you drive?
Nick's talking smack to Mo and I, we both have white Range Rovers. So thank you, Nick.
Pillar number 5 is that we want the number of shares.
At least Nick's not making misogynistic comments this time on the
he'd be president if he was doing that. Pillar number 5 is number of shares outstanding. We want this decreasing.
This is technically an X. It's not bad though. We're going from 1.97 billion shares, 1.971 to 1.976. Not a big difference, but it's still an X nonetheless. We have to be very picky about that.
How about current number 6? Pillar number 6 is current assets greater than current liabilities. Welcome if you're just joining. We love you guys. Thanks for the follow and the support. Keep going, Paul.
$100 billion in current assets. That's cash on hand or readily available for cash or to be converted to it. Total current liabilities, $87 billion. So we have a check mark there. A positive $13 billion in working capital is what it's called.
David Spicer has commented, and he's correct, that Paul drives a white Range Rover. He does wear Uggs and the leggings that you love. You do love the leggings and a North Face vest.
I don't have a North Face vest. I do not wear Uggs, and I do not wear leggings in public.
Well, you're close to that hoity-toity Michigan sort of
Look how nice this is. I bought this weekend in
rugby shirt. Okay, here we go. And let's do
cash flow.
Yeah, most of the time we'll be analyzing stocks. The other time is spent busting chops. But either way, make sure you smash that like button. Let's go. Pillar number 7, free cash flow growth, baby.
They have not had free cash flow in 8 years.
Oh boy. Oh.
Negative. That alone gets me to go, I don't want this company.
No more. You're done with it.
You know, I just don't want it.
Tell me why.
Because
Tell me why.
that's a great song.
It is. Go ahead.
I want a company that has free cash flow. They can go do things with that money. It's a high capital intensive business. How are they not able to generate enough free cash from their operations to even pay for their capital expenditures? That just doesn't add up to me. I don't want that story is not the story I want to be involved with. Like to even have a negative free cash flow, it makes the last two things an X anyway. I'm already out.
You're out of this company.
Out of it already.
Should you go on to the next one?
Absolutely. Let's go to Daimler Chrysler.
Nice.
Which one's Daimler Chrysler? It's Mercedes, guys, for those of you who don't know. All right. These guys are PE ratio.
Jean-Marie is saying, can we all agree that free cash flow is the most important pillar? Paul, I would think you would say that, yes?
Jean-Marie, great question. Oh, Jean-Marie, he and I were chatting on the on some of the statements. I would my biggest one is free cash flow. It's the most important one to me. Because the free cash flow is what you're going to use to do pretty much everything you want to do in the company.
We have some requests off the request line for some other stocks. We will get to them after we hit up these cars. We're going to stay true to our thumbnail that our producer Don made. We're going to stay on cars, but I do see a Hector. I do see a Hector and some other people asking for it. We'll get to that. So great. What's next, Paul? Daimler Chrysler.
Daimler Chrysler, $60 billion company, PE ratio negative. They haven't made money in the last 12 months or in the last quarter.
Uh-oh.
That's a big 2X's. This is what sucks about car companies, guys. They're very tough. Financially, they're very, very tough companies. Profit margins negative. So revenue growth.
Revenue growth, pillar number 3.
Okay, the good news is they have revenue growth.
Okay.
Check mark. But there was a big jump right here. Did they make some sort of acquisition to jump 24 billion in 1 year? It seems unlikely that it was natural. So we'll have to figure that one out. So check mark there. Net income. Look at this. 9.3, 9.4, 11.6, 8.5, 2.6. What is going on with these car companies not making money in the last year? This is pre-COVID, guys. That's what's scary. This is pre-COVID. So that's an X. Number of shares outstanding is a check mark. It's the same, 1.07 all along the way. So I'm not going to look at that one. It's a check mark still. Balance sheet. Total current assets, 139 billion. And total current liabilities, 116. So we have a check plus $23 billion in positive working capital, I believe is the term for it. I think that's what working capital is. So we have a check mark there. Drum roll, please. No, it does not. Jesus Christ, guys. It's all negative. Negative, negative, negative. Negative, 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 negative. Oh my God, what the F? What's going on with these companies? Why can't they make free cash flow?
You tell me.
I have no idea. Does anybody know what the reason is?
If you're watching out there, make sure you smash the like. And if you know why these companies suck, let us know. A lot of people are asking for some of these. Paul, what about if we switch? I'm guessing you're off here.
I think Ferrari. Yeah, I'm off here.
Let's look up Ferrari real quick.
So Ferrari has the greatest ticker symbol ever, race.
Now, again, you're going to own a Ferrari one day, but not a Lamborghini, right? You're not a Lambo guy. And people are
because Lamborghinis are for douchebags, and I'm not a douchebag.
So people are saying Tesla, and my son, my 10-year-old, says nope. He knows to steer clear of Tesla. I drive a Tesla, and I know people might want to look at Tesla, Paul. Maybe just a quick.
We'll take a look at Tesla. We'll take a look at it, even though everybody knows these financials also calculate subsidies. So they will be included. Like Tesla's big thing. The big problem with Tesla is they have 7% of their revenue of their profit margins from subsidies. So good question. But anyways, let's go to Ferrari.
Ferrari.
Okay. Ferrari's PE right now is 61.
What's the market cap?
$46 billion. Their PE is 61. That's an X right now. Again, we don't look at PE just by itself. There could be other reasons for it. Their profit margin, Jesus Christ. Okay, so the profit margin in the last quarter was 1.5%. But in the last 12 months, it was 15%. So I'm going to give it a check mark there because it did have a good profit margin in the last 12 months. So we have one X so far and one check.
How about revenue growth?
And by the way, look at the gross profit. The gross profit is 47%. So if Ferrari sells a car for $200,000 to a dealership, they're going to make about $94,000 in that car. So that's a big thing. Very luxurious brand. They want to keep the number of units down to keep the luxury up. All right. So
revenue growth, pillar number 3.
Revenue growth. Look at this. Love me, Ferrari. 3 billion, 3.3, 3.7, 3.9, 4.1 check. And you know, I believe it's only Ferrari. They're not making any acquisitions. This is a check mark. I love it.
How about
net income?
Profit growth, yes.
Look at this. 319, 441, 606, 926, 778, check mark. I love it, guys.
Great.
I love it.
How about pillar number 3?
I love it. I love it. I love it. I love it. I love it.
Pillar number 5 is number of shares outstanding. We want this decreasing, baby.
189, 189, 189, 189, 186. Check mark.
Nice. Okay. And boy, we're humming right along here with Ferrari. How about pillar number?
Maybe I'll buy Ferrari stock so I can save money to buy a Ferrari.
Current assets greater than current liabilities.
Total current assets right over here. Nate, if you want to put my finger on here, 3.3 billion right over here. Total current liabilities, 769 million. Oh my God, that's a big, massive mother effing check mark.
Why is it so good?
I don't know, because Ferrari is just a great company. Remember, guys, Ferrari is a luxury brand. They don't have the union issues that local car companies have. They can go sit there and be very, very luxurious and charge a lot of money and take their time making money. They don't need to have $100 billion in revenue. They're making, they're going to do great on $4 billion in revenue. That is their goal.
If you're watching along at home on your phone, on your desktop, if you are slacking off at work right now, make sure you smash that like button. Paul, we have a great watch to like ratio, so we want to keep that up. Paul, let's keep going.
I think Jean-Marie is going to be surprised by the free cash flow here.
Pillar number 7 is free cash flow growth.
We have free cash flow at Ferrari.
Okay.
Look at that.
You're clapping like a seal.
Yes, I am. 380. I don't know how to do this math. 750, we'll call it, even though it's not.
Okay.
We'll call it 300. We'll call it 350. And we'll call it 700. So that's a check. A weird check, but it's still a check nonetheless. So 1.5, 2.1, 2.4 divided by 5 is 480 times 20 equals $9.6 billion. That's not going to work for us, though, because the company is selling for
4.6?
$46 billion. So, guys, this is very expensive. And if you actually look at it, it makes sense. I want to pay about $10 billion for the company. It's selling for 46. It needs to drop by. And look at the PE. The PE is 61. So this makes sense. Ferrari is a great financial company. They have great finances. They have great revenue. They have a great brand. This is the company you want to own, but you want to buy it at a reasonable price. Does that have to be 15 times earnings? Not necessarily. Maybe you pay 20 times earnings, but it needs to drop in price a lot.
When was the last time it was reasonable?
A while ago. Because remember, it just went public recently, so it went public during this big boom. I mean, literally, it's probably it's probably 2016 where I'd pay what it's worth today. Remember, guys, I know it sounds low, but you got to remember, investing is just merely in a stock is merely the present value of all the future profit of the company. If the profit is very consistent but slow growing, it just is what it is. Would you pay $46 billion today to make $800 million a year? If the answer is yes, then go buy Ferrari, but you're going to get 2% return on your money. It's not worth it to me. But you want to watch Ferrari, add it to your list because the financials are solid.
Why don't we jump over, make a slight twist and get over to GM because people are asking for it. And did you see that commercial, Paul, for the new Hummer EV?
It's sweet, but it's $120,000.
Okay, so who's buying that?
Probably a lot of people, but
I think at the moment they're saying, there's a little bit of a price jump, right?
All right, GM,
here we go.
$50 billion. Guys, I just don't like American car manufacturers because of the freaking unions. I know for everybody out there who's going to argue with me about it, I don't want to talk about it, but when you have janitors making 130, 140,000 a year, it is hard to make money.
No offense.
Right. More power to you for making 130, 140,000 a year, but it's hard to make money in a car when your pension liability and everything is so high. That's just the problem. At the end of the day, you can talk about how admirable it is, everything, but at the end of the day, as an investor, it's just a hard thing to swallow. So, PE ratio 33x.
A little high, Paul.
Yes.
We want it to be 20.
Profit margin, negative 4.5% in the last quarter and about 1%, 1.4% in the last year. X.
That's tough.
That's not tough. That's impossible.
How about revenue growth?
Hey, thanks for talking about momentum, you dick.
Which for Ferrari?
For all of these.
Well, I mean, you said Ferrari was just too high anyway. So
but we still sort of looked at momentum. We'll look at them. Okay. Revenue growth. X. No, actually, yeah. Oh my God. Look at this. On a technicality, it's a check. It's really not a check though. I mean, look at this. It's just pathetic over here, but it's still technically a check. I'm not going to fight the system. Not going to fight the rules.
Profit growth is pillar number 4, Paul.
X on profit growth, 9.7, 9.4, loss 4, 8, 6.7, X. You guys can see how enthused I am about GM.
GM. Yeah. How about pillar number 5 is number of shares outstanding.
Check 1.586 down to 1.424. Balance sheet. We're going to roll right through this because this company, total current assets, 88 billion. Total current liabilities, 78 billion. Also a check mark. Free cash flow. Let's say they have it, guys. Anybody want to guess?
You tell me, baby.
Make sure this is annual. And no free cash flow. Bye-bye. They haven't had free cash flow in 7 years.
What does that mean?
That means they haven't been able to cover their capital expenditures in the last 7 years from their operating business, which means they have to borrow money. They've had to borrow money in order to finance their capital expenditures.
This is incredible. Let's make sure we're smashing that like. Thanks for the support, everyone. Paul, we had some requests off the chat line here. You want to get to them?
Let's do it.
One is BGSF. Anybody know what that is?
So we're done with car companies?
Well, I think for the moment, unless you guys want to chime in and give me another one, I'm going to take...
I want to kind of give a recap the car companies.
Please do.
I like Ferrari. I like niche. I like their gross margin. I like their profit margin. And I like the fact that I think they make 8,000 cars a year or something like that. I don't know what the exact number is. It's probably more than 8,000. They're not trying to be everything. They're trying to focus on what they're going to do and have quality. In the US, the car companies have the UAW is a very strong union. People are going to make a lot of money. It's going to hard to hold accountability, things like that. It's just be very careful about US automakers, even the German ones, the BMW and Mercedes. What's going on over there? I have no idea. But I look at that saying they don't have free cash flow, guys. When was the last time we saw companies that didn't have free cash flow for 5 or 6 years? I don't think we've ever seen that except for Tesla, maybe.
Yeah, we're getting more cars back in, Paul. Let's hold off on that one since we're sticking with cars. People,
okay.
What is P-E-U-G-E-O-T?
Peugeot.
I've never heard of it. What is it? U-G-P-A?
P-E-U, Peugeot S.A.
What is this?
It's the car company.
Oh, I don't know.
They have a lot of these in Mexico.
Okay.
So PE ratio. Okay, first off, the company is $17 billion. Okay. So you buy the entire company, $17 billion. PE ratio, 8.2.
Hold on a minute. I like that.
Yes. Last quarter, 3% profit margin. The last year.
Not 10%.
Not 10%. It's still an X.
X.
So it's an X there. But again, it's a car company. So let's move on here.
Okay.
Financials.
How about revenue growth over the past 5 years?
Oh boy. Some big jumps. 60, 60, 70, 87, 83, still a check mark. I don't know if they made an acquisition somewhere along the lines, but it had big jumps here, which seems unlikely. Profit growth.
Oh, someone said, is it pronounced Pidgeot? I can't imagine. Maybe.
Peugeot, I think. $1 billion, $1.9 billion, 21, 33, 35.
Wow,
check mark.
Paul, I like that. That's good
we
stuff.
We like that a lot.
Right? Yeah. Okay.
Number of shares outstanding. Ooh, X on the number of shares outstanding. This is rare these days.
What's that?
787, 802, 886, 893, 894. Actually, every year they've had more and more shares outstanding. They must have made an acquisition somewhere along the way.
Uh-oh. Okay.
So, not the best.
Current
balance sheet.
How about assets over liabilities? Pillar number 6.
Current assets, 32 billion. Current liabilities, 30 billion. So it's a check mark there. I don't necessarily want to highlight them because it takes too long to have it go through the whole thing.
So check mark for assets over liabilities?
Yep. Free cash flow, guys.
10
billion, 3 billion, 1 billion, 4.3 billion, and 4 billion.
What do you think?
So it's an X. So 13, 14, 22 divided by 5 equals 4.4 times 20 equals 8.8 billion. That's an X. Now, I wouldn't give it 20. I would not give the price of free cash flow multiple here 20.
Tell me why.
The reason being is it's an up and down. It's a company with low margin. It's a very cyclical company. If a recession hits globally, they're going to be hurt really bad. These are the kind of companies that I would wait until there's a recession that hits, they get hurt, and they withstand it. They'll probably be selling for a very big discount.
We have our intern Nathan in helping us switch today. Don's on vacation. Nathan, make sure you don't cut to me when I'm picking my nose. Okay. So how about pillar number 8, price of free cash flow?
We already did that.
Did we just do that? I'm sorry, I missed it. I was picking my nose. That's what I just said. Hello.
All right. What's another car company?
Well, people are asking. So my son Gio is on, the 10-year-old. He's asking for Pokemon stock. But other John Thiesing is asking him what he actually holds. And so Gio, my son, holds Jets, CCL.
Oh wow.
And 3 shares of Tesla, Paul.
Oh, CMI. Ben Rourke. I looked at CMI today and it didn't hit my numbers, but let's look at it anyhow.
Good idea.
Cummins Incorporated. Based in Indiana. diesel engines used in commercial trucks, off-highway equipment, and railroad locomotives. So, as this country becomes more electric driven, you'd want to understand what is Cummins going to do about that. Are they going to... That's the only thing I would say about this, Ben, but we're going to talk about it now anyhow. But from a long-term perspective, I'm of the belief that over the next 20 years, we're going to become a very largely electric country, and the world will become more and more electric. I could be wrong, but that's what I would say. Okay. The company is $33 billion to buy it. PE, 19.74, check mark. Profit margin, it's an X. Both the last quarter and the last year, pretty much the same thing, 7 or 8% profit margin.
David's saying that the diesel's not going away. I think because of the power it can generate more than electricity.
Oh, is that true?
Pulling these massive things that electrics maybe can't do.
I'm sure they'll figure out something with electric, but you might be right. It might take a lot longer, David. And I'm actually, my Range Rover is diesel, and it's actually more efficient than regular fuel. And besides the weird sound it makes, which is very hard to even discern, it's fine.
Yeah. Okay, keep going, Paul.
Okay, revenue growth, guys. Oh, wow, look at this. 19, 17, 20, 23, 23. Check mark there. Profit growth.
Keep going, Paul. You're humming now. The viewers are coming in.
1 4 1 2 1 2 2 6. Check mark there.
This is good.
Check mark on the basic shares outstanding. 178 million down to 155 million.
This is pillar number 3. We want the number of shares going down.
That's pillar number 5.
Oh, 5. I always say 3 and 5. Okay, we want the number of shares going down if you're watching at home. Pillar number 6 is assets greater than current liabilities.
Okay, total current assets, 9.8 billion. Total current liabilities, 6.9 billion. Check mark there. So that's good. We have another check mark.
Okay.
Now, the biggest one.
Free cash flow?
Free cash flow.
Pillar number 7, free cash flow growth.
Okay.
This is where the rubber hits the road. No pun intended here.
Okay, 1.2, 1.3, 1.7, 1.6.
We will be in costume.
4.
We will be in costume this
You will
coming
be in
Thursday.
costume.
Paul will be wearing a costume.
You will be in costume. 2 5.
He'll be
4,
dressed
2,
in drag this Thursday at 1 p.m.
5
Eastern.
8,
Join
7
us
8,
as always.
8 2 divided by 5 equals 1.6 times 20 equals $32 billion. So, guys, the average $32 billion. What we need check marks for both of the cash flows. It's actually selling for exactly.
Wait a minute now. Wait a minute, Paul. What are you thinking about this?
It's selling for exactly the number now.
Go on. How about momentum?
So let's look at momentum, but let's look at the financials here real quick.
Okay, has this ever happened, Paul? Exactly right on the number.
It's literally on the number from the free cash flow perspective.
Okay.
Okay. The question you have to understand before now, this doesn't mean you go buy it. So Ben was the one that requested it. I think so. Whatever it was, this doesn't mean you just go buy it immediately. What it means is this is a company that might be selling for a reasonable price. Go figure out what their potential is and go figure out what would happen if a recession were to hit. I think a good company you should buy, whether it's good times or bad times. However, their margin isn't the biggest. So you might want to be maybe a little bit of looking at this company saying, hey, if it pulls back a lot, I will buy some in a recession or a down stock market. But so far it hasn't been, we had a lot of check marks. How many check marks have we had?
Almost all of them except shares.
Yeah, it's incredible.
Oh, and margin, like you said.
Yeah, the margin was not
What
good.
about the dividends? Is there something we overlooked?
Well, we don't ever look at dividends. Well, we do. We do. 2.5%.
That's not too bad, huh?
No, it's not. And that's eating up a lot of their free cash flow. Their free cash flow is $2 billion, and 2.5% dividend is almost $900 million.
Dom's saying we should go as Ace and Gary for Halloween. You, of course,
Who
would
are
be
Ace and Gary?
They're the ambiguously gay duo from Saturday Night Live. You would, of course, be the little spoon, as you probably already guessed. But
right.
Okay.
So let's go to the chart on this one.
Yes, and Matt is saying that his Bumble profile says he's looking for someone with lots of free cash flow. Keep going, Paul.
Hey, John, you're banned from this chat forever.
John Thessing?
Yes.
Oh, you can't do that to one of our OG homies.
Well, I'm sorry.
Let's go back to momentum, Paul. Don't get your eyes on football. We know OSU is going to win. Let's go. Momentum. Tell us about this chart.
The 50-day crossed over the 200-day back in July, and it's been going up since. It's been falling. It's been getting further apart. If you'd done this, if you'd bought back then, you'd have bought around 176, and you would have made quite a bit of money. So again, guys, the positive momentum is here. If you do this consistently over time, we have back tested it. that buying when the 50-day goes above the 200-day will yield you a return above the stock market. But you have to be patient. You have to be willing to put up with a lot of small losses along the way. But we have backtested this, Mo and I, and it has beaten the market by about 1% per year. Not a ton, and you might get eaten up in your trade fees and your other fees, but the whole point is it does beat the market over long periods of time.
Gio, my son, I know you're watching. Write down Cummings. We need to look at this company for our stock portfolio because DGF, my spray graphite, has a vested interest in these companies like this, building their engines and doing their things. So, okay. Hector is asking for a couple companies.
By the way, Trader Mo just said CMI is what I call power stock. He'll talk about that next week.
Hector is requesting some stocks that are off topic. We will get to them, guys. We have an hour. We're only 25 minutes.
We'll do BGSF right now because he requested it and we said we were going to do it and then we didn't do it. So
well, listen, people have asked for Honda, Toyota, Mazda,
I know. Let's
and of course
do BGSF
Tesla.
because he's been very patient.
Okay, you're right. He's been on for a while. And Benjamin says, what the F is a power stock? Sounds like a power bomb. What is that?
I don't know, but let's
No, I'm asking you, Paul. What's a power stock?
I have no idea. Mo said it.
Oh, Mo said. Okay, Mo, chime in with what a power stock is, you silky bastard.
Come on, BGSF. Like, this is an $89 million company. What are we doing here?
I don't know. They love it.
Wow, look at the dividend. It fell a lot.
What is this company?
It's a staffing company. 25 PE. Very small company, guys. Very, very small company. X there. Margin. X.
Why?
Margin. X. I mean, negative margin here. Last 12 months, about 1.5%.
Okay.
Financials. Now, smaller companies tend to have better financials. Okay. We do have growth in revenue. Check mark there.
Check mark there. Okay. Keep going. How about profit growth?
Profit growth. We do have growth there. Now, remember, this is staffing. Being part of this year was probably very terrible for them.
Yeah.
Because the economy took a big dive and all that stuff. So you got to remember that. Number of shares outstanding, X.
Pillar number 5, they're growing?
Yes. They went from 7 million to 10 million. X there.
Okay.
On that one.
How
Balance sheet.
Assets
Cash versus,
over liabilities.
Yep. We're going to go to that right now. 40 million in current assets, 18 million in current liabilities. That's a big positive.
Okay.
So yeah, that's great. And 65 million in total debt. So
while Paul's doing this, Hector, if you're still on there, let us know why you love this, why you're so intrigued by it.
Yeah.
We'd love to hear. But keep going, Paul.
Okay, so they have pretty decent free cash flow, though. They don't require a lot of money, which makes sense for a company like this.
Tell me about it.
So they have basically 11 million, 9 million, 17 million, 17 million, and 16 million. So that's a check mark there. 20, 37, 54, 70 divided by 5 equals 10 and 14 times 20 equals, oh, wow, look at that.
Yeah, tell me about it.
Wowzer. Okay, from a free cash perspective, they're selling for a lot lower than they should. So, to Hector's point, this is might be why he brought this up.
Go on.
They've dropped a lot in the last year. I mean, you look at the last 2 years. I mean, they hit a high of roughly almost 30, and now they're at 8. And their free cash flow, when things are going well, that's the thing about, I don't know how these guys do during, the problem is we don't have their data through a recession. I want to see how they did during a recession, the last recession. We haven't had one in a while, but this is actually pretty interesting. I'm not opposed to this one. It's a very small company. Remember that, guys, when you're doing this.
Would you consider this risky, fun money? What do you think?
This is everything we talk about is basically fun money.
Yeah.
I want you guys doing everything in ETFs. But the whole point here is their free cash flow is really impressive. They've got an average of 11 million, 12, $14 million a year in free cash flow, which means if we're out of this recession and things only get better from here and they're able to get back to $10 million a year in free cash flow, even that, you're only paying 8 times free cash flow for this company. That's pretty solid.
Would you like
good find here. I'm in between on this one, but this is fun money stuff. I think it's worth, if you believe, remember their dividend's been cut big time from 8% to 2.3%. But if you believe that we're out of the concern of a recession, then this is probably a good buy.
How about jumping on momentum for this company real quick?
So momentum is probably going to be tough here.
We welcome in Mink from the Netherlands. I see you, Thirsty. Thirsty's sassy this week.
Okay.
One of our OG followers, Thirsty, is really sassy this week. And Paul, we do have another female, our gal from Carpe Diem. I believe you're a female from Maui, which is just south of Jersey. Aloha. But keep going, Paul. Tell me about
first off, only 28 likes, guys. Come on. Man up here. All right, so the momentum is bad here. Mo can make comments more in the chat about what the momentum is doing, but the 50-day is below the 200-day. And it has been for a while. But if you got out of it at that point, you'd be fine right now. In fact, some people would suggest shorting it when the 50-day goes below the 200-day, and you'd be in the positive right now if you shorted it.
So again, with all this said, Paul, like we always want to buy stock. I mean, we want to buy low, sell high. This is super low. So
but it's all relative to what it could do.
I know. And
again,
I struggle with this. Like as a normal person, I struggle. Like it looks really low. How's the health? Like what's your take home on this company?
I don't think it's terrible. It's all about guys, remember everything. Everything we do is about what assumptions you're making going forward. If you believe that we're past the recession and the job market's going to get better and better for the foreseeable future, I think this is probably a good buy because their price of free cash flow is very low. At the end of the day, that's what's paying your bills is the free cash flow, right? So the PE here isn't indicative of the free cash flow and the normalized PE because it's based off the last 12 months, which had a really bad. So you guys want to look at the quarters. Let's look at the quarters.
Keep going.
Financially. Quarterly.
Mo is saying that this company is setting up for a great short-term short.
Oh, okay. So look at the quarters, guys. Their revenue dropped big time in the last quarter, but look at their profit. That's the big thing. They lost $4.8 million in the last quarter versus they made $3.8 million in the quarter in the same quarter year before. That's an $8.6 million swing. For a company that makes $14 million a year, $10 million a year, that's a big jump. That's a big drop. Now, I'm sure something happened that caused that. What the reason is, right here, special income charges. Do you guys see this right here?
Circle it.
Look at this right here, kids. Special income and charges, 7.2 million.
So their market cap is only 80 million, 84 million bucks?
Correct, 87. Hector, go figure out what this was. That's very important. All right? Once you do that, Hector, I think you need to understand, like, that would be an important one to know.
If you're watching and haven't subscribed yet, please do so. You're getting all this information for free. You don't have to pay a single nickel out of your pocket. Just subscribe and like, and YouTube will pay us and pay Paul for this wonderfulness. Not even Paul, may pay me and Don.
And you know what else?
Go on.
Don't forget, guys, our YouTube channel is now live 1 o'clock Tuesdays and Thursdays. We changed the 11 o'clock Tuesdays to 1 o'clock.
That's right. Welcome in, everyone all over the world. Yes, we love you.
Correct.
Okay. Paul, Hector is also asking for CAC.
We just did a Hector stock. Let's go to somebody else real quick. What do you think? Let's go back to Honda. Let's go to Honda.
Let's go to Honda real quick. Hector, we'll get to that.
By the way, I can't stand the car business.
Tell me, right off the bat, you just look.
I just look at it going like, the car business is one that I immediately like avoid at all costs. It's so cyclical. Margins are so low. I effing hate it. But anyways, $42 billion to buy the company, 23 PE, X. All right, profit margin for the quarter, X. For the year, X. This is why I freaking hate car companies. They don't like making money. They love just taking money and pissing it down the toilet. Oh, sweet. Oh, sweet shit.
Thanks for joining us, everybody, and thanks for smashing the like. Paul loves the likes, and we talk about this all day. Paul and I have been planning more and more in making this podcast and this show much more of our lives, and we're going to continue to do so moving forward. So keep going.
All right, revenue growth, it is positive. It's been declining for the last year, though. If you look at it, the first quarter of this year probably had a dip because of our good friend COVID.
How about profit growth?
Profit growth. It is technically a check, 2.8, 5.7, 9.5, 5.5, 4.2 check. I want everybody to realize something. If we were sitting here in March of 18, if we were sitting right here and this didn't exist, what would you be saying right now? You'd be like, oh my God, look, they're making a ton of money. But look what happened. That's why not everything. People say like, oh, what are the chances that Honda loses half its profit? Well, it happens, and it happens all the time. So remember that when you're going forward. Don't just assume because a company is big or great that's going to be around and doing great forever. Number of shares outstanding, check mark, 1.8 billion down to 1.75.
Nice. Shares are going down. Great.
Yep. Let's go to the balance sheet.
Assets over liabilities, pillar number 6.
$65.6 billion in assets, 51.5 in liabilities, check mark there.
Nice.
Free cash flow. Let's see if Honda, a Japanese company, has free cash flow.
Go on. Alex, we're going to get to Subaru for sure.
Scooby-Doos. All right. 4.3.
Now that I say that, I got to write that down.
2.3. 3.8. 1.6. 3.5. X. Average is 6.6. 10.4. 12. 15.5. An average of 3.1 times 20 equals 60. I think it actually sells for a reasonable amount. I do that right?
Do it again.
60.
You went to sell for. What are you thinking, Paul?
Oh, Honda might not be bad. It has free cash flow. It's my most important one.
Wait a minute now.
Boy, I hate car companies. I just hate them. They're the worst. I mean, like, I don't trust them. That's the thing, guys. I don't trust car companies. Like, how do they have $9.5 billion here in profit when they didn't even have? Did they sell it? Did they sell something? Oh, that's weird.
Ayrton, we see you there. Yes, you're right. We recently hit 2,000 subscribers, and I think we just bumped over to 2,200. We are growing rapidly, and it's exciting us for sure.
Very exciting. So I'm not an X on Honda. Here's what I'd say: if you really want to own a car company, go to Honda.
Really?
Like, I mean, listen, it's just way better than the other ones. The U.S.-based ones are just terrible. They make no money. I mean, I don't. They hate money. They're just like, oh, by the way, I have Ford stock. Keep in mind, I do have Ford stock.
If you look back a couple live streams ago, Paul revealed all the stocks that he owns and all the puts that he owns, which are quite confusing. We'll do a whole show about those. But Paul, you only own maybe what, like 15 stocks?
I don't think you're that many.
Yeah. Do you want to look at momentum here for Honda? See what's up?
Yeah, let's go to momentum.
And we will do Subaru next. Now I'm intrigued. People are asking for it.
Okay.
Uh-oh.
See, it's very little trading because it's foreign. But it is on the negative right now, guys. It's gone below the 50-day, has gone below the 200-day. It's slightly negative. I would want Mo to comment on this one in the chat about what's going on here, because it's I mean, look at this up and down. This is very sparse trading. So who knows what the heck's going on here? Mo, you comment, bro.
Dave, welcome. We do not miss Toyota. We're gonna get to Toyota as well. Paul, let's do Subaru right now. FYFUJ, weird symbol. Go for it.
Okay, Scooby-Doo's.
What is the market cap for Subaru?
$15 billion company.
Okay.
The PE is 20.78. What should I do, Seth? Check or X?
I think that's, I like that.
All right, you're going to check.
Yeah,
I knew you were going to.
Yeah, PE, I like that. Okay.
Profit
growth, or profit
X.
margin.
Profit margin's bad.
No?
It's a car company. They hate money.
Okay. Revenue growth over the past 5 years.
All right. Over the last 5 years, how many 65-year-old women have bought Subarus? 27,
Yes.
30, 29, 28, 30. Technically a check mark right there.
Nice. Okay. 65. Yeah, the Subaru Outback. It's a great car, Paul.
I could have gone further, but I did not.
How about profit growth?
3.6, 2.6, 2, 1.2, 1.4. X. It is declining. Number of shares outstanding, declining as well. Check mark there.
Wow. Okay. Check mark for shares.
Balance sheet.
Assets over liabilities. Pillar number 6.
18.25 versus 8.6. Check mark there.
Great.
In fact,
They can pay off their whole company? Come on.
correct.
Wow.
Is that correct? Yep, guys, this is a big check mark. They have 18.25 in cash and cash equivalents versus 14.5 in total liabilities. This is all the money they owe, not just the ones due today. This is all the company's debt. This is the holy grail of investing, in my opinion.
Now, Benjamin said that his 63-year-old mother did buy an Outback, and Nicholas is very certain that Subaru is popular among Antifa members, which I know you have. You're a card-carrying member, Paul.
Yes, thank you very much. Oh my gosh.
Thirsty has a Subaru, and a Trader Moro is correct. Antifa is an idea, not a group. That's correct, Mo. Great point. Let's keep going with free. That was free cash flow growth. So
no, it wasn't. That was total current assets versus total liabilities.
Now free cash flow growth. This is the
Please
end all be
effing
all.
pay attention.
I'm sorry. I'm trying.
Why are they missing?
Trying to read silly comments and babysit you the whole time.
Yeah, it's a hard thing to do. They don't have any free cash flow in the last year.
Uh-oh.
I don't know why they're missing data here.
This is weird.
Yeah, that's weird. Why are they missing data? Is that a Y charts error?
This
Sounds like a scam is right.
Wow. This is weird.
All right. Well, I can't really analyze that, but
They're
last
frozen.
year wasn't
They're
very good.
Okay, go on.
And then even the previous year, this is a tough one.
Okay, go on.
I didn't understand. So what I would tell people talking about Subarus, go look at their historicals, financial data, their 10Ks, and figure out what their free cash flow was in those years that were missing, because the last 2 years weren't good. Wouldn't justify the investment, in my opinion. But everything else seems, it's still a car company that makes 1% of profit or whatever stupid number it is.
So you're just in general staying away from a lot of these, huh?
Yeah, I liked Ferrari because of their margin and their uniqueness and their niche to rich people. You know what I mean? I just think it's a niche that.
I don't think people, regardless of the economy, people still buy Ferraris.
New ones, yeah. I think in the used world they probably suck, but You know, Ferrari, they're very good about saying, hey, in order to get a new Ferrari from us, you should probably be a previous owner of a Ferrari.
Just for our new viewers, do you want to show them why you can get very run from Tesla quite quickly? Just look at the numbers.
Let's look at Tesla.
Again, this is long-term investment, disciplined investments, not day trading, right, Paul?
Correct.
Go ahead.
And it's correct.
Look at that jump. Just buy, right, Paul?
Wow, their PE ratio is down to 850.
Oh, down from 1,500.
So $400 billion company for a car company. Cool. Oh, I'm sorry, a battery company.
Go on.
X there. Profit margin, 3.8%.
Okay, not bad.
X there.
Okay.
How much of that's because of the government paying them a check?
Okay, go on. Keep
Financials. Going. This is annual. Definite check there.
Wait a minute, Paul. They're going. What are they doing now?
Yeah, they're going up.
Check. They're going up. Okay,
yeah, they hate making money though.
Okay, profit growth.
Now, this is not the last few quarters have been better. We'll look at that. But profit growth has been technically it's a check. Technically, it's a check. It's stupid. They lost 888 million. They lost 862. So technically, it's a check.
Great.
But,
they're moving up in the world.
Yeah, they're working up in the world. Let's look number of shares outstanding. X because it's going up. Shocker there.
Okay.
Not.
Okay. How about?
Let's look at the quarters. Let's look at the quarterly numbers.
Okay, go on now. They've been doing well now, Paul.
Yeah, they are growing again. So this last quarter they did 8.8 billion in revenue versus 6.3 in the same quarter the year before.
That's more money.
That is more money, and they made more profit.
Go on.
From 143 million to 331. But guys, the big thing here is, and Mo can talk about it in the chat, they got that subsidy from the government where the government gives them a check every time they sell one. It has now been maxed out. And 7% of their profit was from that subsidy. Other people are like, look, they still had gross profit growth. It doesn't matter. It's terrible. They only made money because that's subsidy. If you want to buy it for $400 billion company, if you want to buy this company for $400 billion, guys, you're better off buying
Go on.
every other car company out there combined for 400. I mean, what do all the car companies out there combined do?
Yeah.
So you can literally buy Honda, Toyota, all these car companies for about $100 billion, for about $400 billion combined, like literally 10 car companies. Why would you ever buy Tesla?
And they make more cars
and they make
money.
1 billion times more cars.
Mm-hmm. Interesting.
All right.
How about Toyota, Paul? Thanks everyone for the follow. I'm sorry about that 4 seconds of dead air. Sometimes you have to gather ourselves. This is live, so I watch some of our not so much competitors, Paul, but other great people doing finance. And they have very scripted shows, carefully calculated. This is just off the top of our head. So that's why we, Paul, you need a break every once in a while. I know your shorts are very tight. They're cutting off restriction, blood flow to everything. And so, yeah. But anyway, we thank you for your like and follow. And we love you guys for joining us every week. Every Tuesday and Thursday, 1 p.m. We're going to be doing this. Okay, Toyota, $187 billion to buy the company in full. PE is 13, check mark. Very nice.
The margin is 3.5%, roughly, but on the net income, on the trailing 12 months, it's about 7%, still an X. Their gross profit in the last quarter was 12%. That's pretty awful. But again, it's probably because of COVID and all that stuff. So financials.
Revenue growth.
Okay, let's go to annual. We're going to go to annual right here. We have 237 million, 275. Check mark there.
Okay.
Profit down here at the bottom, 19.3, 16, 22. 9. So technically this is an X because it went from 19.3 to 19.1, but that's a lot of money to make in profit. So on that, guys, nope, they're still below 10%. Number of shares outstanding.
Yep, pillar number 5, number of shares outstanding.
Check mark, 3.1 billion down to 2.8 billion.
Okay, very good. How about assets over liabilities?
Assets over liabilities. $190 billion in current assets. 175 in total liabilities. So we have a check mark there.
Very nice.
Free cash flow. Let's see what Toyota likes. Let's see if Toyota likes free cash flow.
Keep going.
Drum roll, please. And the answer is barely. 3, 1, 5.5, 0.2, 0. X. Jesus Christ, guys. Try to make some money here.
Oh no, what happened?
This is terrible. So 4, 9.5, call it 10, 2 times 20. Yeah, this is awful. Equals 40. I mean, guys, this is bad. They have
Toyota?
no free. I mean, it's just, guys, the free cash flow in the car business is awful. You know why? They're putting so much money in their factories to make more and more. It's just, I mean, how much more are they going to grow putting all that money? I mean, they spent $33 billion in capital expenditures last year. They spent literally every dollar of operating cash flow into their capital, into investing back in their property, plant, and equipment. It's very difficult to do that.
I think people want to change sectors. They've asked for a little bit. Maybe we should move on off these cars since you hate them so much.
Let's do it. What do you guys want to do?
I would say we welcome in Ramon and Trader Mo's giving us some extra insight into some of these companies. But Michael Biggins says, great job. I love you, of course. But he's interested in Rocket Mortgage.
Let's talk about Rocket Mortgage.
Rocket
like
Mortgage
it.
is very near and dear to our hearts. We are in Akron, Ohio, technically Richfield, but Paul and I both say we're from Akron. And so the Cavs, Cleveland Cavs, Dan Gilbert, and Rocket Mortgage are very important to our city and our state. And let's get after it. I love Rocket Mortgage.
Okay. $41 billion in market cap.
That's it?
Yes.
Okay, that's
PE is not showing a PE right now. Why is that? But their net income. This is weird. Something's wrong here. Let's go to their financials off the bat. I think they have. Oh, there's very limited data. Look at this.
What's going on?
I don't know, but they have good margin. Check mark on margin. PE X. The revenue 3.5, 3.5, 4.2.
That's
check.
going up. Okay.
Profit 770, 612, 894. Check. So 2 checks there. Number of shares outstanding is a check mark because it hasn't gone anywhere.
Nice.
Well, because they've only been public for like 3 months.
It's just these are months?
Yeah, I mean, those are they've only been they show the previous few years, but they've only been public for a few months. All right, total current assets 907 million. Total current liabilities 380 million. So check mark there. But this is a financing company, so I think the financials are more closer to a bank. LeBron Jones is the best. Thank you, Brody.
my son said go caves. I mean calves. He wrote caves. Good
I like
boy.
it.
He corrected himself.
I have a 40-year-old friend who still writes caves, so it's okay.
Oh yeah, and Matt Jensen wants to know about Square. Let's do that.
That's right. Let's do Square.
Let's do it.
I
use that.
I blocked my boy.
What are we on here?
But here on Rocket, let's go to the cash flow on Rocket.
Shouldn't you and I, Paul, just buy some Rocket just to be cute?
No.
For home, just to be homers?
Negative, positive, negative. This is weird. Why do they have $7 billion in negative operating costs last year? Guys, this is a big red flag to me. Their cash from operations last year, in which they made $800 million, was a negative $7 billion. That is a red flag. Why is that?
They had to pay LeBron? No, LeBron left.
They paid him $7 billion.
What happened, Paul?
I have no idea.
Anybody know what happened out there?
So that's why we look at the financials, guys. The financials tell a story that we have to try to understand. That is one of them. So I would be a pass on Square, on Rocket Mortgage right now. Let's go to Square. Okay. Oh, thank you, Matt, for a good company.
Square?
Not.
Oh, already. You don't even
75 billion. 275 PE.
Oh
X.
no.
Profit margin in the quarter, negative. For the year, 5.5%. X.
How's Square not making money?
Because they're probably trying to grow like crazy.
Okay.
Let's look at their revenue. Look at this growth in the revenue. 1317223347. Check mark there.
That's good stuff. Yeah.
Really good stuff there. Look at this. Profit, negative 180, negative 170, negative 62, negative 38, 375. Check mark there. Okay, so they started making money. Good for them. Balance sheet.
Brody says Square wants to get bought. What does that mean?
They want somebody to acquire them.
Oh, probably.
Maybe so.
Okay, keep going.
So total current assets, 6.2 billion. Total current liabilities, 3.6. They actually have more current assets than liabilities. 6.2 versus 5.9. That's a check mark. That is a good financial statement. That is a very good financial statement there. Statement of cash flows.
Free cash flow growth.
Let's see what's going on here. Oh, wow. Look at this.
Steve, we're doing Rocket right now, baby.
Okay, I like this. I'm going to ignore these years because they were kind of rough. 230, 400. I mean, would I pay $8 to $10 billion for this company? Probably. And it's selling for 75 billion. Shocker. So it's got to fall a lot, guys.
This is Square.
Yeah. It's got to fall a lot.
A lot.
That's the thing, guys. This is a fast-growing company, but it's still selling for too much, if you ask me. 275 times earnings. The PE, the price of free cash flow is, 100, about 200 times. So you look at it going, okay, it's 180. It's like, come on. At some point, you got to sit there and say, even if it's going to be acquired, is it going to be acquired for that kind of multiple? I don't know, maybe. But let's see him trading. I mean, this is going to be insane on the technical side. Mo, look up the technicals on this one for yourself. Look at this.
Jakeem says we should look at Denny's.
Is Denny's public?
He said so. Let's see. How funny.
So, guys, the 50-day went over the 200-day back in June, and it was around $80, $85 a share, and now it's $160. You would have doubled your money. That's pretty solid. And look over here. It meandered here and about a couple of times. Went over, under, that kind of thing. So right now, there's positive momentum on Square. If you see right here, it's kind of like decreasing a little bit in terms of share price, but it looks like the gap between the 50 and 200 days is still increasing.
Okay, David S. Pumpkins wants CRSR.
Corsair Gaming, what's this?
He says it's a new IPO. It's up 25%. Long-term investment or day trade if you have time.
I'll do the day trade stuff because there's no financials there that's showing me. So the day trades, oh my gosh. Like literally it just went public like a month ago. There are no 50-day or two. I can't even do anything with this thing.
Sorry, guys. If you want it, go for it. Yeah, a month ago. Go ahead, David. Let's look at Denny's. This will be hilarious. Why is Denny's so funny? So
Trader Mo said Square has defied life. The chart is fading. Have a good example of what a power stock was. Remind me next week. I don't know what that means.
Okay, thanks, Mo. Thanks for the insight.
Denny's Corp.
Okay. Get your pancakes, get your flapjacks. They have the all-star breakfast, right, Paul? You get this all the time.
I have no idea what you're talking about.
Paul, when was the last time you cooked a meal for yourself?
I don't cook.
Folks, I'm not kidding. You go over to Paul's kitchen and he doesn't actually cook his own food, if you can imagine that. That's how separated from reality this guy is. And but that is kind of funny, Paul. Like you really don't cook your own food.
I just don't cook. I don't like cooking. I think it's a waste of time.
So he has like a house lady make him like pre-made food for the week.
And I save a lot of time because of it.
Yeah. And you eat a lot of Chipotle and Mexican with me.
That's true.
But yeah, I mean,
I will make you shawarma one day, Paul. Thank you very much, Thirsty Program.
Thanks, Thirsty. Now tell me this, Paul. When was the last time you mowed your? Do you have a mower? Do you mow your yard?
I don't mow my yard, but I have a mower.
Have you ever mowed your yard?
Yeah, of course. Not this one, but in my parents' yard, I used to.
I'm in your house. Have you mowed
this current house?
Yes.
No.
What about weed whack? You don't?
No.
Pulling weeds?
Nope.
Okay.
Why?
Just seeing what life's like.
Should I do it?
I mean, the folks out there want some insight on who Paul is. You know, you got
Paul broke his mower, man.
You got this Michigan shirt. You wear your tight shorts, and people just want to know more about you, Paul. They don't care about me.
Oh, Matt's right. I did mow my lawn once. You're right, Matt. I totally forgot about that. Matt is right. Matt is 100% right.
When was this?
That's right.
Did you lose a bet?
I totally forgot about this. No. So my backyard is separated with fence.
Uh-huh.
So I put my dogs back there. So I hired a new grass cutting company. I said, guys, don't cut the grass in the back. I will cut the grass in the back.
Oh, Lord, why?
So, of course, I ignored it for a while. Finally brought the mower back there, completely broke it. I did not forget to put gas in it, Matt. I cut like half of it, but the grass was very high and I ended up breaking it.
Let's look at this stock. We'll get back to why people are here.
Thirsty Program asks, how big is your house, Paul?
Oh, that's interesting, Paul.
That's a good question.
How big is it?
I don't really know. Matt said he has zero clue.
We will do a walkthrough through Paul's house
one
day, and you can see the 6 extra bedrooms he has with the ghosts are sleeping in at the moment. What are we doing? What company is this? I can't remember.
What was it? Denny's.
Denny's. Oh my gosh. Yes.
So market cap is 667 million. PE is 12. The last quarter, they obviously lost a lot of money, minus 57%. But for the trailing 12 months, a very healthy margin. 53 million on 375. That's what, 15% at least. So that's good.
Okay. How about revenue growth over the past 3 years?
So check mark on both of those.
Okay. Look at Denny's is down. This is exciting. Let's do it.
All right. Revenue. 490, 506, 529, 630, 540. Why are they down last year? No idea.
Okay. Still check though?
Still a check.
Okay.
Net income, 36, 19, 40, 43, 117 check mark. So they had less revenue and 117 in profit.
Okay. How about
number of shares outstanding?
Pillar
check
number
mark,
5.
83 million out of 60 million. That's pretty impressive. Check mark there.
Nice. This is great stuff, Paul.
Balance sheet.
How about current assets over current liabilities? Pillar number 6.
63 million versus 76. Restaurants have a hard time with this one. It is an X. Restaurants tend to have less current assets than liabilities.
Okay. How about free cash flow growth? Let's do it.
Okay, let's do this.
The Patreon is coming, folks. You can be a member of our community. You'll get more exclusive access to Paul, a Discord channel, more videos from Paul, exclusive videos, one-on-one time, face-to-face time with Paul. All of this will be coming on the Patreon channel coming very soon.
X on free cash flow growth. So 57, 108, 168, 219, 250 roughly, divided by 5 equals 50 times. So yeah, this is a check mark here, guys.
You like it?
So Denny's, what I want to understand about Denny's though is Denny's is selling for $600 million or something like that. 667. I mean, look at this chart right here, guys.
Go on.
Look at this. It was over $20 a share, and now it's at 10. It's over half off. The question you have to ask yourself is,
are you buying Denny's right now?
I would look at this seriously.
Oh my goodness.
Yeah. So thank you. Who brought up Denny's?
I can't remember. Back a little bit. Who brought up Denny's? Keep going, Paul. I'll look it up.
I really don't like restaurants where I can microwave better food. Thank you very much.
It's not about you, though. It's not always about us, right? It's like people eating it, right? I mean,
yeah. This one's good, guys. So here's what I want to understand about Denny's. Why their revenue even went down last year. I want to understand that. Why their revenue went down, but their profit went up in a year that didn't have COVID, right? Because look at their revenue. The revenue went down from 630 down to 541.
Oh, this is Joakim Nielsen. Joakim Nielsen asked, look at Denny's. Denny's is good ice cream here in Ohio. Keep going on Denny's.
Okay, so hey Mo, Mo? Tell me your take on Denny's. Add this to our list of stocks to look at, which Mo and I have a mutual shared notepad on our iPhones where we look at stocks. But Denny's is probably pretty solid. I mean, this is a company. Hell, look at their revenue though. I mean, look at this in the last 10 years though. This is what's concerning. 550, 540, 488, 462, 472, 491, 506, 529, 630, 541. I mean, it's flat over the last 10 years. Why is that?
Mm-hmm.
That's just weird to me. I'm not opposed to this. I want to figure out how many locations they have, how well the stores are doing. This is not an automatic buy, but I'm not opposed to this one. South Carolina, it's based out of.
It's very rare. Gio, my son, my 10-year-old, he's impressed as well. I'm certain he wants to have some Denny's stock, something he can get behind.
Well, let's do some more research, Gio, before we start sitting there and putting our life savings into a stock.
It is his life savings, that's for sure.
That's exactly it. All right. Okay. Well, I'm not opposed to this. We'll take a look. I don't know why they made so much money last year. There must have been some sort of event that occurred. Was there some one-time income from net interest income? Other income and expenses. There it is.
What is it, Paul?
$94 million last year on something. They made $94 million doing something last year.
Selling flapjacks?
I don't know, but their profit would have been $24 million wasn't for that. Okay, not terrible. Let's
Momentum?
Still not bad on it. Let's go to the technicals.
We have about 3 minutes left, Paul.
Oh, that's it?
Mm-hmm.
All right, guys, it's meandering here. It's coming down here.
It's Jerry meandering?
No. So look at this, guys. Look at this big thing. You go back to October. Wait, it's 1 year. If you go back to December of 19, January of 20, look at this. The 50-day went below the 200-day. If you'd shorted here, you would have shorted at $22 a share. Watch it go all the way down. You'd have made quite a bit of money following our 50-day versus 200-day average. So it's still below the 50-day. It's still below the 200-day, but you can see they're getting closer and closer and closer. So there might be a buy soon, a buy indication soon.
Keep your eye on Denny's.
Keep your eye on Denny's.
Join us Thursday at 1 p.m. Eastern. And as always, we have a video coming out every single day. I can give you some more information in that Paul and I are getting together. We're getting our cameras at home, our home studio set up so we can go live even quicker to bring you analysis that might be happening in the morning or interesting things. Obviously, we record some videos and then publish them a little later outside of our live stream. So we will keep it up and keep it going. More exciting things to come. We thank you all for your support. Paul, last words when it comes to the market at the moment.
Suck it.
That was very promising, Paul. Thanks for joining us on the Everything Money channel with Paul and Seth. Love you guys. Appreciate it. See you Thursday.